All right. Good day and welcome everybody. For those of you who have made it this far, I want to congratulate you especially for being able to conquer all the odds. And I hope that this would be just the beginning of greater things for you in the world of Forex. So in this video, we're going to continue from where we stopped in the last set of videos about trend, support and resistance. So in this video, we're going to talk about what it means for a trend to be broken or to be respected, what it means for support or resistance to be broken or to be rejected or to be respected. So because of this video, you're going to realize that when you have resistance and you have support or you have trend lines running between them, it is possible for price action to come and break through one of them and get rejected at the other one and start back through the other one and continue down. Or it could get rejected at one of them, at support for instance, bounce back to the trend line and get rejected at the trend line too and continue back to support and finally continue until it breaks through one of these or both of them at the same time and then goes back up. So with a good knowledge of trend, support and resistance, you might be able to trade from here to here and trade from here to here and trade from here to here and make a lot of money in between. So this is what we'll be looking at in this video here, how to trade excuse me, how to trade using these powerful tools: support, resistance and trend line. So let's slide over to the MetaTrader 4 platform and see what we've got there. All right, welcome back to MetaTrader 4. So on our MetaTrader 4, I'm going to hide this so we can see more of the chart. On our MetaTrader 4, you realize that I have my support and resistance drawn already. I have my support and resistance both on the daily, like I show you in the video about support and resistance. In fact, I should put one more resistance up here. Let me bring that in now so that in case you have forgotten your video on support and resistance, please go back to it, or at least this will be a refresher for you. So I've put a resistance here. There should be another resistance up here as well. I'll just drop that there right now. Let me drop that there too, just for the fun of it. Okay, so I have a new set of resistance. In fact, this should even be a channel. So let me drop a support at the base there too. Perfect. So we have a channel. In fact, I should even talk about this at once as well. So, excuse me. I don't know what's with this cough. Forgive me, please. All right, so we have our support and resistance in place. And somewhere in this order, we also have a trend line. We have a trend line hiding somewhere there too. Well, okay. Okay, we actually have two trend lines. We have one here. I think this one, I drew this a very long time ago. Okay, I drew this a while back. And okay, so let me even start from here. Now, you have a trend line that was drawn in 2017. Imagine that. I drew this trend line sometime in 2017 around December. And I completely forgot it's there. And you see how it's been respected all the way to April 2018 and May 2018. Now, how do we trade trend lines? To trade trend lines, the first thing you need to do is to draw the trend line. When you draw the trend line, like we have done here, you see that the trend line respects both. What you need mostly is for the trend line to touch 2 points on your trends. Okay, you need the trend line to touch 2 points of your trend. So we have the trend line touching this point here. Sorry. So here we are. You see where price first bounced off this trend line was at this point here. Now, when you talk about price rejecting a trend line, you are referring to when price falls from a resistance to a support or to a trend line and it bounces off that trend line, as you see in the case of that last candle. You see this last candle, this black candle with a long tail, we call it a pin bar. okay, followed by another pin bar. Now the first one is a bearish pin bar and the second one is a bullish pin bar. That is, the first one is a bearish pin bar, which means the price ended in a downtrend, but the very next one ended in an uptrend and is a pin bar as well. That tells you that price is rejecting this point here where those two meet, and it means that it's going to go all the way to the next point. Okay, so usually if you study up on your candlestick, which you should have in the PDF material that I sent up, there is a section of that PDF material that is about candlestick. I need you to study up on that candlestick aspect very well so that you understand these candles that you're looking at and what they mean, because all of these candles are talking to you. As a trader, you should learn to understand the language of candles. Okay, now when a candle bounces off any of these indicators, that is a resistance, a support, or a trend line like this, what the candle does is it aims for the next resistance. If it bounces off a support, it's going for the next resistance. If it bounces off a resistance, it's coming for the next support. If it bounces off another support, it's going up for the next resistance. If it breaks through that resistance, it's going for the next one. If it breaks that one, it's going for the next one. If it bounces off that one, it's coming for the previous one it hit. And if it breaks that one, it's going for the next one. If it bounces off that one, it's going for. So this is how price runs through resistance and support as it is going up and down. So right now, if you want to compare the resistance and support with this trend line, you realize that price rejected off this and came straight for this support, for this resistance here. And when it got to this resistance, it bounced off that same resistance with this pin bar that you see here. That black candle with long wick up there, that is a massive indicator that price is going to reject at that point instantly. But when price rejected, it came back down a little, but it couldn't even hit the trend line. You see, it went off, it bounced off the region of that trend line, okay, and went back to retest that top again. Now when it retested the top, it failed again, fell back to the trend line, and then came to where the trend line and the top resistance intersected. Can you see that? And when it got to that place, it played a little. You see how it formed the W there, and immediately after it rejected off that place, it went straight off to the next resistance, even though there was a little pause along the way. But like I told you before, price does not just go up, it goes in zigzags. It might pause, come down a little, go up, but basically it's aiming for the next resistance. That's simply what it means. So you see how price went straight up from one support to the next resistance, and as it's going, it's respecting that trend line. It touched the trend line when it took off, it touched it again at this point, it touched it again at this point, before it finally got to this point. Now if I was trading this point where it hits both resistance, both support and trend line, is where I would take a buy. Why would I take a buy here? Number one, I'm going to zoom into these candles a little so that you can see better on what candles I'm taking action on. Okay, now I am zooming into the candles so you can see what I am seeing as well. Now look at this. You see this first white candle here. Now you see how this doji here formed on top of a trend line. I want to be watching what the market will do next, because a doji is a sign of indecision in the market. Am I right? You've seen that we saw that under candlesticks. Okay, now immediately after that doji followed a powerful pin bar, this guy here, and that pin bar rested squarely between the trend line and the and the the support here. What does that tell me? That the bears are getting tired. Of course, it ended up as a bullish pin bar, even though it's coming from a bear trend. You see, it was coming from a downtrend here, but the bears are getting tired, and that is why you see that the pin bar ended as a bullish pin bar. That is an uptrend. And after that, there's another indecision in the market, which ended up as still a bearish pin bar. And immediately after that, you see this candle here is an indication that the mood of the market has changed from down to up. Okay, so having seen this 1, 2, 3 candles, and I finally see this last one, I will get into the trade at the end of this one, which means I will buy at the end of this candle. I will be buying here because I expect that this candle will take the trade back up, and it did exactly that. See that immediately after he bought, he sold a little more, and immediately after that, if I was in the trade, I would have bought here and I would have bought another one here. And the moment it finished selling that, it took off from here. And when it takes off from here and bounces through this resistance and back to the trend line, you see it's still respecting this our trend line that we drew here. Now, how do I know you might say that the trend line was broken here, was broken here, was broken here, was broken here, but it's not so. Before you can say a trend line is broken, it will mean that once a candle breaks through the trend line, the very next candle after that should support the previous candle that broke it. Now, what that means is this: I have a bearish pin bar, which would have been a perfect break, but instead of another bearish pin bar forming immediately after that and coming down, I had a bearish candle, I have a bearish candle here that formed and broke through both the resistance, both the support and the trend line. It came down. Beautiful. Now, if this was supposed to continue as a downtrend, then I would have expected that another bar would have formed here coming down from that point. Instead of that, a completely different candle formed going up. That is to tell you that it is not it is still respecting this trend line that we have drawn, as well as this support that was there. Do you see what that candle did? So this candle gives you assurance that these two indicators are still being respected. And immediately after that, you see another bearish candle form, telling you that we are still not sure. We still want to try to go down again. And then the second one formed after that. This second one would have given us the indication, a feeling that you want to continue down. But no, it did not. And I would not expect it to continue down as well. If you look at those two candles, you realize that they have very long upper wicks. Can you see that? When you see candles with long upper wick at intersections like this, it's a fake out. We call it fake out. It's a fake sign. The actual meaning of this candle is not, even though the candle themselves are bearish, the wicks are telling you that the sentiment of the market is towards where the tails are pointing at, where the wicks are pointing at. So you might want to be going in the opposite direction. So if I was trading, having seen this long wick and this long wick on these candles, I will buy at the end of this candle. When this candle finally closes here and the next candle opens, I will buy there. And what do we see immediately the next candle opens? We see a gap between them. Remember what I taught you, that where one candle closes is where the second one will close, except where there is a gap. So you see that this black candle closed at this place, but the white candle came down a little to open at this point. That is an indication that there is a gap forming. Now, a gap is another strong indicator of a change in the mood of the market. So when you see a gap like this, gap closing back up, then it's an indicator that there's a move change in the market. So this changed the mood of the market, and then it went back up. And then one more thing you notice is that all of these four candles, as powerful as they may seem, are resting squarely between the trend line and the support. So as you can see, all of those candles are resting squarely either by their wick or by their body inside that those two indicators. So that is a strong indication that there is a change of trend in the market. So if we had been coming down before, like we were doing here, we had been coming down all the way from here down to this point, that means the mood has changed and we might be going all the way up to the next resistance. So I will be buying from this point. This is something that tells me I should be buying, and when I'm buying, I'll be targeting the next resistance. Now, how do I know whether to keep buying or not? Is the trend line still respected or not? Yes, you see the trend line respected at this point. It got to the trend line, went back to it, and went back up. Let me reduce the size a little, okay? So you see, when it got into the trend line, went back up again and continued up, came back down to retest the trend line, failed again and continued up all the way to this resistance here. So that is how to buy to buy using support and resistance. In the next video, I'm going to talk about channel, which is this section of this. Okay, so I will have different ways of taking trades based on support and resistance. So this is one strategy of trading support and resistance in line with trend line. So in the next video, I'll be talking about channel. See you in the next video. Thank you for watching this.